How we doing, guys? Welcome back to the course. In this video, we will be talking about safe haven flows. So, safe haven flows refers to money going in and out of safe haven currencies and safe haven assets. What a safe haven asset is a widely accepted asset class that money pours into in times of economic unrest. So, to put that a bit more simple, when the economy is not performing well, when the global economy is not performing well, or a single strong currency is not performing well, and the economic outlook is a bit bleak and a bit uncertain, money then flows into safe haven assets. Okay, there are a number of safe haven assets, and as forex traders, there are a number that we're going to trade and need to be aware of. Right, we've got the US dollar, the Japanese yen. We also have gold and silver, precious metals, right? That's going to go for platinum and palladium, etc., etc. These are not so widely traded, and personally, I don't trade them. So, what a safe haven flow is then is the shift of money from one class to another. Okay, let's say then the US dollar is taking a battering, right? The US economy is not looking good. There is growing national debt. There's growing inflation. There's growing unemployment. All these things causing the dollar tension and making the dollar quite an unattractive currency to hold. Now, while this happens, people with money parked in the US dollar, right, high net worth individuals, institutional traders, hedge funds, things like this, investor demand in that US dollar is going to go down, right? Investors don't want to be holding their money there. As we spoke about earlier, the supply and demand aspects. Money should not be in the US dollar if people are trying to protect their capital because the US dollar is going to be losing strength, right? So what people actually do then is shift their money elsewhere into other safe havens. Now, the US dollar is a safe haven currency, and whether or not it's a strong one, whether or not it is one that has longevity, who knows? But it's a safe haven currency. So when we see that getting battered, and that's not even a safe place to park money, money then often shifts into precious metals. Okay. Precious metals, gold, silver, the main two. Gold being the main one. Silver follows quite closely in suit, though it's performing much lower, right? But as it stands then, that is where we're really going to be focusing on these safe haven flows, okay? Gold and the US dollar and the Japanese yen. So, when the US dollar and the Japanese yen are not performing too well, times like these where we have bad economic conditions, investor demand is low for that currency and money then begins to shift into new assets. And the main assets that they shift into, as mentioned, are those precious metals. So if we actually view this chart here, this is the gold chart, long term. We're looking from 2006 up to 2020. So looking at this then, look good, cool. And then for 7 years, we were held beneath this resistance point, right? Gold rallied, saw this big pullback, and then found home under here for 7 years. Now, this was all good. The US economy was not too bad. Interest rates rising, everything looking good from a monetary standpoint. And then we actually get into these harder years, right? Shifting into 2019, a lot of things begin to crop up. We have, of course, growing national debt, problems with the financial infrastructure of the US, right? Government shutdowns, the coronavirus pandemic, etc., 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 which sent this thing flying, right? From the end of 2019, start of 2020, we've actually just seen this thing going insane, right? And this is because primarily down to the economic shutdown due to the coronavirus pandemic, right? The economy all around the world, global economies took major hits, and the US dollar included, the US economy included. So, the US dollar taking hits, all of the other currencies becoming an unattractive place to park cash, shifts investors then to actually focus on the safe haven assets like gold, precious metals, platinum, palladium, silver. Money gets shifted into these safe haven assets and demand increases, right? Supply is taken up and demand continually increases. What that causes then is a safe haven inflow where money is flowing into this safe haven asset, right? And what that causes is movements like this, a monthly chart showing parabolic gains, right? So there we go. That is the kind of chart you're going to see when we have these safe haven flows. Big upside movements with a lot of money being pushed into the market, continuing that climb gradually. Okay, so that is a safe haven inflow, and that's a nice example that's been taking place in the world recently. We are really just looking for money to shift in or money to shift out of a safe haven asset or a specific currency. So if money's shifting out of the US dollar, if the US dollar begins to perform weak, the main place that money runs is generally gold. So a weaker dollar is normally going to provide a higher price for gold. Okay. On the contrary, when the dollar starts to perform really well, people begin parking their money in cash once again and investing into US stock markets, etc. Money is taken out then of gold, and gold can actually gradually lose value. So that is safe haven inflow and outflow, right? We don't need to use these in too many ways, except for focusing on the dollar, focusing on the yen, focusing on gold and silver. Okay, and really we just use this to our advantage as an additional little piece of confidence, and an understanding of where price is going to move. If we see price trading at a resistance, but we know fundamentals, safe haven flow, chances are price is going to push straight through this boundary, then we can actually avoid selling against fundamentals and then trade in line with it, right? So safe haven flow, understanding the safe haven inflows and outflows, and the actual economic performance of specific currencies and precious metals, different asset classes as well, is going to help you to understand currency direction, gold direction, and yeah, just give you an extra layer of clarity and confidence around your trades. So in a nutshell then, that is investor safe haven flow, inflow and outflow. If we have safe haven inflow for gold, that means that money is flowing into gold, and chances are the money value of that gold is going to increase. If we have safe haven outflows, this is normally where money is going to be leaving these assets and moving into other diverse areas. When this happens, these assets are likely to lose value. Okay, demand is falling, supply is increasing, and the market is then flooded. Scarcity falls and price falls in line, right? So we've spoken about it before. Quick recap there, and of course, the new edition of this safe haven flow approach. So thanks for watching, and I will see you over in the next video. Hopefully you found some value. This is definitely just going to be one to add to the list. When you're looking at fundamentals, think about gold, think about the US dollar. Where are they going to be driving each other? Okay, gold and the US dollar are the two strongest correlations. Australian dollar is, of course, also going to have a correlation with gold, and so is the Swiss franc. So definitely something to just go and check out. Review that on the charts, okay? But generally, safe haven inflow, going to see these assets rise. Safe haven outflow in areas where the economies are growing, stock markets are growing. Money is going to shift out of these assets, out of precious metals, back into the US dollar and dollar-based assets, and likely then cause a rise in the USD. So thanks for watching, and I'll see you over in the next video.